Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Hyde, Taylor Riggs counting you down to the closing bells, here to help take us beyond the bell. It's our global simulcast partners, Carol Massar and Tim Stenovec. We welcome in our audiences across Bloomberg Television, Radio, and YouTube. Carol, another update here. We'll take it here. Not necessarily the broadest of gains, but 0.9% on the S&P 500, 0.6% on the Dow. What are those in points?
Yeah, exactly. We'll see what the tone is, certainly after the closing bell, and looking at futures after Facebook Meta reports that stock is up about 1.2% here ahead of their results. Keep in mind, it's 5% of the NASDAQ roughly, so it does definitely have the ability to impact the trade, especially when it comes to the NASDAQ. Yeah,
a lot of the moves that we've seen today have been due to earnings and have been earnings driven. An update from Bloomberg Intelligence, our team there, more than 75% of companies in the S&P 500 that have reported earnings thus far have beat. Though, as Carol mentioned, we are not done yet. We have Meta platforms in just a few minutes. Qualcomm,
and what is the read across, Tim, there, sorry to jump on you, from the likes of Alphabet, with really phenomenal fourth quarter spending, the advertising, the commitment from companies to be willing to spend. But it's not just Meta we look at. Qualcomm, we're going to really inside track on supply chain. Qualcomm being a company that's managed to really navigate the supply chain hell that many chip companies have had.
And it was really Stuart Kaiser of UBS, I think, putting into perspective the balancing between the micro and the macro. And right now, it's actually the market's getting a reprieve from the micro, really getting to hear from the companies, from the CEOs, the fundamentals. But in the background, and what Anna Hahn over at Wells Fargo was saying is, from the macro, you actually have some stability in yields, which is giving these equity markets a little bit of time to digest.
All right, a lot to go through here after the closing bells. We'll take you to the metaverse in just a second, but we're getting the closing bells here. The Dow Jones Industrial Average going to finish the day higher by about 200 points or so, roughly 0.6%. The S&P 500 also in the green by about 40 points or 0.9%. The NASDAQ higher by about 67 points or 0.5%. And let's take a quick look at the Russell 2000 real quick. Going to close the day down, Tim, 1% here on the day.
Hey, I'm watching shares of Spotify. Those numbers just coming out, and it's a miss on that really important monthly active users number for the first quarter, coming in at 418 million versus estimates of 422 million. The company also saying it no longer plans to issue annual guidance. They see revenue coming in at $2.6 billion for the first quarter. Estimates were for 2.6, so meeting there. But that monthly active users number, missing estimates, shares tanking now, down 9.2% in after hours.
I mean, this is after, of course, we saw that surprise rally in Spotify in the last few days. They managed to perhaps catch a bid, particularly yesterday. There's been a lot of mood music around this company, of course, when they see their focus on podcasting. And some of the issues, the tension they find between their musical artists vis-a-vis some of their most popular podcasters, Seth Rogen being a key issue there. But this is a company that's, too, getting dragged into the misinformation space.
Yeah, exactly. And so there's been a lot of news on it. We've got some other earnings crossing the bow. You want to go to Qualcomm, guys?
Yeah, let's take a look at Qualcomm here. Second quarter, let's start with the first quarter. The adjusted EPS coming in at $3.23. That's a slight beat over the $3 average estimate that the street was looking for. Revenue for the first quarter on an adjusted basis, $10.7 billion. Street was looking for 10.4. Guiding forward to the second quarter, the fiscal second quarter here, looking at revenue for $10.2 billion. Street was looking for 9.6. And as far as adjusted EPS, $2.80 to $3 a share. That's the range that the company is giving for the forward quarter. Looking forward, the street looking on average for 2.48.
Yeah, Qualcomm got strong demand from Android phone makers. This is an important company when you think about Apple and, the companies that are the main customers of this company, that gives you an indication in terms of demand and what they're seeing as well.
In all seriousness, though, we're going to get metaverse in a sec, or meta platforms in a minute. But when we talk about sort of what the future is in this market, a lot of people are looking to chips, whether it's chips going into, phones or computers, data centers, cars, whatever
VR.
it is. And then they're looking, VR. And then, of course, they're looking to, I guess, what you could call some of the content platforms, like a Meta platforms, or to a certain extent, like what we saw yesterday with Alphabet. That is, to certain people, the future.
That's why it's going to be really important to get an update from Meta on Facebook Reality Labs, right? This idea of the Oculus numbers being broken out for the first time, and getting an understanding not just of the hardware, but also of the investments that the company is making, because it's going on. This is like a full investment in the metaverse.
It's a full investment and a full rebrand of the company. And I'm curious how does this move away from just gaming and entertainment? Can it, or does it need to? Can it just be that and be profitable, or does it need to be something more practical?
It's about work as well, isn't it? It's about the fact that we interact no longer just in the confines of our offices, but we do that in a more virtual reality kind of place as well. But this is a company that's committing $10 billion thus far. We want to understand, well, what the profit implication therefore is, and also growth of people using their underlying social media, and indeed they're going to be making a big push to why you should be using WhatsApp at the moment. It's interesting though, they're going to have a supply chain effect when it comes to building those Oculus headsets. Qualcomm CEO saying that he wished he had more supply to meet the demand that they've seen. Demand from China handset makers, they say, is strong.
He did say demand accelerating across all businesses. What's interesting about, you talked about Meta, though, how much money they have to spend to really shift from being an advertising-based company to something much more. Let's talk about T-Mobile, because we've seen this stock also coming out with their earnings and moving around in the after hours. Fourth quarter revenue, that was a miss, $20.79 billion. The estimate was for $21.07 billion. What's interesting, too, is in terms of some of their users, postpaid phone net adds up 844,000. That was a little bit better than what the street was forecasting. And their fourth quarter EPS was 34 cents a share. And we are seeing that stock up about 4% in the after hours.
Yeah, I'm continuing to watch Spotify because shares are continuing to move lower in the after hours now on that subscriber miss. Spotify tumbling 15% in after hours trading after that outlook misses estimates. Caroline, you talked about the Joe Rogan controversy here. Certainly a lot of questions will be around the effects that the platform has seen. As we talked to Lucas Shaw earlier in this week, he said that despite the fact that artists like Neil Young, Joni Mitchell, Brene Brown, who does podcasts, have said they're leaving the platform or stopping to produce new podcasts on the platform, he doesn't expect that to make a big dent in premium subscribers or subscribers unless you have a name like Taylor Swift, for example, come out and say that. And we just haven't seen that yet.
Well, and this raises an issue, too. I mean, when Spotify went down this road, when you become much more of a content platform, there's always that question of how you police that platform. Similar questions, of course, that Facebook, Meta Platforms has had to deal with. And it seems like the response all along has been, well, you don't really do it. I mean, you basically just give people kind of what they want, and as long as you're not, I guess, violating the law.
Well, it was interesting, Romaine, to see what Spotify CEO Daniel Ek released on Sunday.
Here comes Meta.
Yeah, Caroline, go ahead. I know we're seeing those Meta earnings now.
Yeah, we're coming with the fourth quarter ad revenue, $32 billion, $32.6 billion. Their overall fourth quarter revenue, $33.67 billion, ever so slightly ahead of expectations. But remember, this is a slowdown in terms of pace of growth. It's about a 19-20% increase in revenue. We're used to in the 30s, so a little bit of a pullback there. They see their first quarter revenue being $27 to $29 billion. That is shy of where the market wanted to see this sort of growth. So here is another company where we're having to readjust, acclimatize ourselves to what the growth really looks like. Their Facebook daily active users, 1.93 billion, slightly shy again of the expectations and basically flat from where we've seen their user base of late. So this is a company that is slowing down. They see headwinds from increased competition for time. Remember, this is TikTok. This is the company that is going incredibly focused on those short form videos that YouTube's trying to combat. We saw that weakness in Alphabet yesterday. And 2022 tax rate to be similar, though, to the year 2021. I'm pleased to say Mandeep Singh's with us, senior technology analyst for Bloomberg Intelligence. And when you're reading into these numbers, what do you make of it?
Well, so clearly, I think it was inline revenue growth, but the miss was on the operating margin side. And what it shows you is this company will continue to invest when it comes to building the metaverse, really hiring more people. CapEx is going to be huge, almost growing incremental by $10 billion. And you mentioned TikTok. In my mind, they're also losing users to Roblox and the gaming platforms. So the younger demographic is really moving away from them.
Mandeep, how do we distinguish between investing in the short term, the pressure that puts on margins, maybe the initial reaction, which pushes the shares down 50%, versus the long term? And as an analyst, how you look through quarter after quarter to see, but investing now, you think Amazon a few years ago, it'll pay off dividends in the end.
Yeah, absolutely. So look, their growth rate has decelerated to being in line with the digital industry growth. So ad industry is growing around, mid to high teens. That's where Facebook is growing, and it will continue to be that way because they are the scale players when it comes to social network.
Where are the advertisers going, Mandeep? Where are they going right now?
That's a great point. So they don't have a choice. If you're an advertiser, you still want to spend on Facebook because they have the data, and they're still better off than, without IDFA.
Do people want to spend on Facebook? I know they have to. Do they want to?
Well, so from an advertiser perspective, clearly they can see Facebook is losing engagement. But guess what? If they were to allocate their ad dollars to some other platforms, they're not getting the ROI on that ad spending. So that's why they will continue to spend, because Facebook still has $3 billion monthly active users across its family of apps.
Mandeep, I think the question at this point is, this is a company that's pivoting, and the stock has really gone nowhere since they announced their name change back in October. They're talking about spending billions when it comes to the metaverse. How questionable is this move? I mean, investors aren't buying in at this point. Do you think it's risky as somebody who follows this company and understands kind of where the tech world is moving towards?
Well, so we know Facebook has made a transition in the past, back in 2012, 2013, when they moved from desktop to mobile. Guess what? They are really betting the farm on this, and they're really early into this trend. So I wouldn't bet against, Mark Zuckerberg and his execution when it comes to the product side. But at the end of the day, look at the competition. It's really coming from TikTok and Roblox and these gaming platforms that are really focused on the younger demographic. When it comes to the demographic from 25 to onwards, Facebook, with its Instagram and WhatsApp, is still the platform that is the scale player.
Hey, Mandeep, we should note that Facebook Meta platform ceased trading under the ticker symbol Meta in the first half of 2022. We know that Roundhill used to actually have that ticker, but Facebook will start to trade under that in the first half of the year. We're seeing shares of Pinterest and Snap lower after this report. Help us understand the repercussions of this miss that Facebook reported today on what we're seeing with other companies and what we should look for from Snap perhaps tomorrow.
Yeah, so one thing is obvious is search spending is very solid. That's what Google showed us yesterday. And social media ad spending is tapering off. And part of that has to do with engagement. Like I said, engagement for all of these companies is peaked, and you're seeing decelerating trends. And as an advertiser, you don't want to allocate all your ad budget on companies that have lower engagement, and so that is why you're seeing the other social media platforms also decline here.
I'm curious, if you go through the press release and the CFO Outlook commentary, it's pretty negative. They're highlighting headwind after headwind after headwind, not to even get into some of the currency issues, the Apple iOS changes that they talk about. They're talking about, of course, from advertisers that higher prices are impacting ad budgets. To Romaine's point, you do want the eyeballs, but you're getting strong things like Alphabet, where ad is really strong. Are we not seeing sort of that strength continue in Facebook?
Yeah, so clearly IDFA has lowered their ability to target those ads. Facebook's USP was really, their ability to target ads, show personalized ads. That has been curtailed with IDFA, but it's not just for Facebook. It's also for Snap, Pinterest, the entire social media ecosystem. Google search is different. It's performance advertising, it's keyword-based, it's all first-party data. But I think my point here is Facebook still has its family of apps, and it has a lot of first-party data that other social media networks don't have. So I think it was a kitchen sink quarter in terms of throwing all the headwinds and negative news out there. But when you look at the overall space, it's hard to see Facebook suddenly falling off in terms of the top line. So they will track, I think, the digital ad industry growth going forward, at least for the next few quarters.
All right, we are talking Facebook Meta platform earnings right now. We should point out just real quickly, the shares are down 18% here in the post-market. Remember, this is a stock that doesn't really move to those extremes. Moves like this are extreme. If it does do this in the cash session, this would actually be one of the biggest declines that we've seen in Meta platforms going back to 2018. We are in conversation with Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence, who's helping us walk us through Meta platform earnings. The numbers themselves overall seem to be disappointing investors. The revenue numbers coming in a little bit light. The forecast also coming in a little bit light, but it's really some of these capital expenditure numbers and the idea that ad growth may not necessarily be as strong as it was, that may be giving people some pause here. Mandeep, talk to us a little bit about this idea of what that CapEx spending can maybe do to make up for whatever longer-term deficiencies we may see in ad spending.
Yeah, so look, they've talked about getting into NFTs and really some of the new concepts that are out there. So the risk for an app like Instagram is all the influencers move away from Instagram and create their own NFTs. So Facebook really wants to be ahead of that trend in terms of catching that trend and making sure the influencers don't go away. Similarly, with the Core Blue app, you have to embed, what Roblox is doing on the gaming ecosystem. You have to bring that kind of content in the platform to drive engagement.
Mandy, what I don't understand, though, is they're talking about the capital expenditure being driven by data centers, servers, network infrastructure, office facilities. And they say that actually, look, yes, they're going to invest in AI and machine learning across their business. When it comes to overall the focus on the reality labs, they say, look, they may require more infrastructure in the future. But right here, right now, they're saying they do not require substantial capacity today. I thought we were going to front load this investment in reality labs, but that's not the case.
So maybe right now there aren't enough chips available for them to, but at the same time, they are betting big on Oculus, and they had a great holiday season when it comes to unit shipments on the Oculus side. So clearly, I think they are taking the entire company and also the talent on that side. I guess it's a longer-term strategy, and investors won't give them a pass like this, quarter after quarter.
Mandy, the losses, they're breaking out family of apps and reality labs. You've gone from $4.5 billion in losses 2 years ago to $10.2 billion in losses. It's a parentheses, it's a negative number. Of course, being totally offset by the revenue and the income from the family of apps. But losses are accelerating. Is that to be expected?
Yeah, they are selling their Oculus device at below the cost price.
Okay.
So they are really subsidizing, the
Just for market share?
Just for market share. They want to be the #1 Oculus VR headset out there globally, and they are really trying to subsidize it upfront because they know once they have the install base, and remember the 800-pound gorilla here is Apple. They're going to come up with a gear that's attached to their phone, so they really want to make sure that they gain that traction in the meantime.
Well, so Mandeep, I mean, you've got to put out a report tomorrow, and I'm just thinking, what's your headline on this report? As you see a company that is thinking about the future, that has potential, no doubt about it. You've been talking this week about the market size of that. I mean, what's the headline for this company?
Well, so really, it's a hope-based strategy, but one that makes sense because clearly every company is talking about metaverse. Microsoft spent $70 billion buying a $9 billion revenue run rate company in Activision. I think what Facebook has to show is to show the investors that all the incremental capex is going to result in revenue. Think of the Activision $9 billion revenue.
Well, they're certainly not buying the metaverse story today because the revenue forecast missing estimates and fourth quarter user growth short of expectations. That's certainly what's sending shares lower in after hours now. Mandeep, when we do think forward to the future of meta platforms, what does the actual metaverse look like in terms of revenue for the company? Where do they get revenue? Is it still based on advertising? What does that look like? Because right now, the vast majority of this company revenue comes from advertising.
I think metaverse is a play for them to diversify that revenue and get into more transaction-based revenue as well. I talked about NFTs and just developing a marketplace where you can have more token-based revenue. So advertising will definitely be a major portion of it. But I think with advertising, it will come a lot later in the metaverse once you have the engagement. Initially, it will be more about driving transactions. Like I said, token-based monetization is another avenue they'll look to tap.
Hey, Mandeep, and let's just remind everybody, Facebook shares, Meta shares, they're now down about 18% in the after hours, so they're sinking big time. Revenue forecasts missing expectations and estimates, fourth quarter user growth short of expectations. What's interesting, too, and you said, we're all talking about Meta. If Facebook had not come out in the fall and started talking about Meta and the name change, would we be having as much of a conversation if they hadn't kind of opened the door?
Yeah, we probably won't. And look, between that, we have seen 2 or 3 big acquisitions, Take-Two, Zynga, Microsoft, Activision. So clearly, everyone is focused on acquiring content. And that's a big question mark when it comes to a metaverse strategy. How will Facebook build all that content? It can't be all organics. So they should be able to acquire something. But in this kind of regulatory environment, they can't even think of acquiring anything, so they have to do this organically.
Absolutely. I mean, they're under the microscope a lot right now, Mandeep, and you sort of wonder if they can even sort of entertain the idea, Carol, of what they're doing. Yeah. I mean, once again, the headlines here on Facebook, certainly a bit of a disappointment. We'll see if this ends up being just sort of a one-quarter thing, Caroline, or whether this is more of a longer-term shift, but a shift that could cause investors a little bit of pain as they make this transition into the metaverse.
1/5 of their market cap, kind of a pain, of course.
And it's dragging down all the other names, You mentioned them earlier, Tim. Snap down 18% right now. We also talked about Spotify. You might as well throw it in that social media space. That's down 17. Twitter down 9. Pinterest down 9. So many names in this space attached to that are getting dragged down by some concern here as to what's going on.
Yeah, absolutely. If we were looking for a savior in Meta in terms of maybe giving another kick to the upside for tech, it's not necessarily what we're going to see today, Caroline.
Mandeep Singh is going to be joining us as we go dig into the world of Meta a little bit further on.
Yeah.
Senior technology analyst from Bloomberg Intelligence, Romaine.
Okay, as we were obsessing, of course, over Meta platforms, we had another actually big decliner today in the after-hours trading, and that's Qualcomm. The chip maker had initially risen in after-hours trading on the back of its earnings, now down as much as 8.5%. Ed Ludlow out in San Francisco joining us now to talk a little bit more about this. Ed, overall, the top-line numbers, the bottom-line numbers all seem to beat expectations here, but it looks like some of the commentary in here might be giving investors some pause.
Yeah, this is fascinating. All the signs point to strength, right? A really bullish second fiscal quarter outlook. Remember, this is a company that in November had an analyst day and gave a multi-year horizon saying that they'll hit $46 billion of revenue in 2024. So it's hard to understand here what's driving the market. Maybe it's the commentary around supply still being limited, but improving. Maybe this is a stock that did well in regular trading on Wednesday and it's sell the news kind of stuff. We had a good kind of vibe that Qualcomm's doing well in its diversification efforts. The story under Cristiano Amon has been move away from the traditional strength, smartphone, it's the biggest maker of smartphone chips, towards new areas like automotive and IoT. Both of those did great in the quarter just gone, so it's hard to know what the sell-off is attributable to.
All right, Bloomberg's Ed Ludlow with a very quick update there. Of course, the big movers in after-hours trading include Qualcomm down 4.6%, Meta Platforms down 20% right now, Carol.
All right, that's going to do it. Yep, some big movers in the after hours. That's going to do it for our cross-platform coverage Beyond the Bell on radio, TV, and YouTube. We'll see you again, same time tomorrow.